Today was Fed Day, and the Federal Reserve did make a quarter-point cut to their Fed funds rate. This was their first cut since December 2024. However, counterintuitively, mortgage rates actually went up slightly after the Fed cut. According to Mortgage News Daily's rate survey, the average 30-year fixed rate increased by 0.09% today. So what gives? Well, first of all, the Fed funds rate does not have a direct impact on long-term rates, like mortgages. But what does impact mortgage rates is the amount of demand that investors have to purchase mortgage bonds or mortgage-backed securities. You see, the more investor demand there is for mortgage-backed securities, the higher those prices go, and inversely, mortgage rates fall. So yes, we want more demand, more people wanting to buy these. But what really shook the market was the press conference that Fed President Jerome Powell gave after the rate cut announcement. In the question and answer session, Powell stated that future cuts this year will be on a meeting by meeting basis. And that really downplayed or undermined the dot plot chart's projections that showed that there could be up to 2 more cuts this year in 2025. He also called this cut more of a risk management cut, and investors, they really didn't like those comments. Check out how he said it.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move.
Additionally, he did not mention reducing the amount of the balance sheet runoff or quantitative tightening, or the possibility of maybe reinvesting that runoff money into the mortgage-backed securities market, which would help mortgage rates tremendously. Instead, he said this.
We're cutting the size of our balance sheet quite marginally now. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large.
He basically downplayed the runoff's impact. So with Powell's remarks in the press conference, the mortgage bond market sold off, and that's why we ended up seeing some losses in pricing and increase in mortgage rates slightly. Pricing was already at a pretty high level, so there could have also been some profit taking by investors who saw an opportunity to sell at these higher, frothier levels. It'll be really interesting to see how everything unfolds over the next 2 or 3 trading days as investors try to digest the Fed statement and the press conference that Powell gave. If you like this kind of video, if you like the content, make sure to follow me so you can see future mortgage market news. Thanks for watching. I'll see you in the next video. Bye now.